Assalamu alaikum ji. How are you all? This is your teacher Haris Bhatt, and today I'm going to solve in front of you a question from our accounting paper, obviously from our AS accounting paper, and that basically paper belongs to May-June 2024, variant 22, question 2. You are seeing my YouTube channel, Learn Accounting with Sir Haris, and today we are going to do something very special and unique, which is not right now on any YouTube channel, or it is not yet available, in the social media also. So I have planned some students of mine from all over the world. They helped me out. They have given me the paper. I have gone for the solution, and then I'm putting up this solution on my YouTube channel. So I welcome you all. So today I'm going to solve. I've already uploaded the question 1. One thing was missing from question 1. That was that which concepts are basically applied regarding the expense or income account, that is matching or accrual, because expenses and income is going to be recorded for the period to which it relates. Either it is paid or not, or it is received or not, right? So that was two marks question, which was missing in the first question. So there are 4 questions in the paper in May-June 2024, variant 22. Question 1 from incomplete record. I have already uploaded the solution for that for you people. You can ask any query regarding that. If there is any question, you can WhatsApp me directly. Today we are going to solve question number 2, which basically belongs to the chapter of errors. So the question is basically from errors, but we have actually company accounts along with errors. But you never suggest that it is a complete question of company. I believe it is a question of errors actually, and that relates to the corrected balance sheet and corrected income statement, or in case of company, we have to go for corrected retained earnings. So let's talk about the question. I will start reading the question. J Limited financial year ends on 31st December. At this date, the following balances remain in the books of account for which the statement of financial position is to be prepared. 8% debenture, 90,000 is given. Cash and cash equivalent debit balance. So it means that it includes cash in hand, cash at bank, and anything which can be converted into cash within 3 months notice. 28,900. Furniture and equipment at carrying value. Carrying value is the same as book value. Inventory is 84,000. Issued share capital 0.5 each. So you can find the number of shares also, which is not required in this question, as this question is not related to company in totality. It is related to errors. So 7,50,000 divided by 0.5, you will get 15 lakh shares. Just for the reason of, just for information, I'm telling you. Property is a non-current asset. Retained earnings are given. Revaluation reserve is given. Share premium, trade and other payable, and trade and other receivables. The following errors has been discovered in the information shown. Inventory at 31st December has been undervalued by 3,600. So let's calculate it. When the inventory is going to be undervalued, you need to be very clear about this. You have to pass the entry, and that is going to be closing inventory, because it is undervalued. So I will debit closing inventory because our asset is going to increase. Closing inventory is an asset. So asset is going to increase. So I will debit closing inventory because of the asset is going to increase. And the amount of closing inventory by which it is undervalued is, let's take, that is 3,600. Over here it is written 3,600. So closing inventory is debited with an amount of 3,600, and we will credit cost of sales. So cost of sales is credited by 3,600. So if inventory is undervalued, it means that you have recorded the closing inventory, which is an asset actually, less than its actual amount. So it will affect dual aspect, according to dual aspect concept, it will affect income statement also and the closing inventory. So closing inventory is going to be debited. Increase in asset, debit, because it is undervalued, so it has to be debited. And cost of sales is going to be credited because we have subtracted more amount from cost of sales, because we have overvalued, we have written closing inventory less than its actual amount. So because of that reason, cost of sale is higher than the actual value. So in order to decrease the cost of sales, I have to give it a credit. So cost of sale is going to be credited. It means that this 3,600 is to be added in the retained earnings or added in the profit to make it correct. Again, I will repeat it again. Yes, why not? Cost of sales, when inventory is undervalued, it means that closing inventory, which is subtracted when calculating cost of sales. So the closing inventory value is less than its actual amount. When it is less than its actual amount and it will be subtracted from cost of sales will be higher because you have recorded inventory less than its actual amount. The closing inventory will be recorded undervalued. It is undervalued. That's why cost of sale will be overvalued by 3,600. And because cost of sale is an expense, it is debited. So in order to decrease cost of sales, I have to give it a credit. So closing inventory debit and cost of sales credit. Next, let's see. Next is furniture and equipment has been depreciated by 25% instead of 20% using the reducing balance method of depreciation. So furniture and equipment, which book value has been given in the question, that is 1,80,000. But the question is basically telling us that it had been depreciated by 25% instead of 20%. यानी 25% पे किया हुआ है 20% की बजाय. Rather than depreciating it by 20%, we have depreciated it by 25%. So we have to correct it. The amount is 1,80,000. This 1,80,000, we got this amount after the depreciation, after the subtraction of depreciation, after the deduction of depreciation. And that depreciation is 25%, which is wrong, which is wrongly subtracted. So the amount of 1,80,000 is equal to 75% of the amount which was depreciated earlier. So 1,80,000, because it is subtracted, it is 25% depreciation has been charged. When 25% depreciation has been charged, it means that 25% will definitely be subtracted from the carrying amount which was at the start. So now the amount is 1,80,000 after the deduction of 25%. So that 1,80,000 is 75% of the value at the start. Means it is 75% of the value at the start. So if you calculate it, so value at the start is going to be any value before depreciation, you may say. Why not? You can say value before depreciation will be 1,80,000 divided by 0.75, because 75% means 0.75 divided by 0.75. I didn't write point. Let me fix it. Yes, divided by 0.75. So the answer is going to be, that is 2,40,000. So 2,40,000 was the book value at the start, and it means that it has been depreciated by 25%, which will become 60,000. 2,40,000 multiplied by 25%. So it has been depreciated by 60,000, which was wrong, which was not correctly done. It should have been depreciated by 20% according to the question. So it should have been depreciated by 20%. So the depreciation should have been 48,000. So let's move back towards the question so that you may understand what I'm telling you, what I'm trying to inform you, that you have depreciated 25%. It means that from 2,40,000, you have taken 25% as depreciation and subtracted it to get 1,80,000, which is wrong. So 2,40,000 should have been depreciated by 20%, which becomes 48,000. So simply that instead of going for a depreciation of 60,000, you should have charged 48,000. It means that the depreciation has been overcharged by 12,000. आपने depreciation करनी थी 48,000 से, 20% of 2,40,000, but you have charged depreciation 25% of 2,40,000 instead of 20%, which is 60,000. It means you have subtracted more 12,000 more than the actual depreciation, or with regard to 20%. So this is depreciation has been overcharged, or so you have to go for the reverse of the depreciation. That is going to be, entry will be provision for depreciation will be debited, and profit and loss, statement of profit and loss is going to be credited with an amount of 12,000. Okay, you need to decrease the depreciation. We have decreased the depreciation because the depreciation has been overcharged by 12,000. So provision for depreciation debit and profit and loss account is going to be credited. You must be thinking that, sir, why you are passing entries? You may go for the calculation directly that you have wrongly written 60,000. Now you will adjust the amount. You should have written 48,000. So you adjust the retained earnings or the profit by 12,000. No, because this is the usual procedure. This is the usual way. If the question could have asked you to prepare the entries, then what you have done at that time? You have to pass the entries. So I believe that go for the full procedure. Whatever has been adopted regarding the theme of the chapter. So the theme of the chapter errors basically requires you to prepare the entries. So that's why I'm going for it. Forget about the time. Time doesn't matter. Next is sales return of 1100 had been recorded in the books of prime entry, and purchase return. The error affected the general ledger and the personal account of credit customer and credit supplier. So sales return had been recorded in the books of prime entry as purchase return. Very simple. Let me tell you, explain you. Entry for sales return is going to be sales return debit. Entry you will pass for sales return is sales return debit and trade receivable credit. But what you have done, you have passed the reverse entry. You have done trade payable debit and purchase return credit. Sir, how could you know that you have passed the full entry? There are two reasons behind that. Let me explain you. Just G. So let me explain you that there are two reasons. Trade payable to purchase return. Right? I'm just using the abbreviation. So we, instead of passing the entry sales return to trade receivable, I have passed the entry trade payable to purchase return. Now you must be thinking, sir, we can understand that instead of passing the entry, instead of debiting sales return, you have credited purchase return. But how trade receivable and trade payables are affected? Let me tell you. Number one is this, that sales return had been recorded in the books of prime entry as purchase return. It means that the entry has been recorded fully. The double entry has been recorded fully as purchase return. So trade payable and trade receivable will be affected. Number two, the error affected the general ledger and the personal account of credit customer and credit supplier. So the examiner has given you the information that the trade payable, which is credit supplier, and the trade receivable, which is credit customer, has been affected because of this error. So when they are affected, it means that we have to pass sales return to trade receivable, but instead of we have passed trade payable to purchase return. Now let's go for the rules. First of all, we'll correct the mistake. Purchase return will be has been wrongly credited. It will be debited. Then sales return is not recorded in the books on the debit side. I will record it in the books on the debit side as it is, because it is not recorded, 1100. Then trade payable has been debited. It is wrongly debited. So it is going to be credited. I will credit per trade payable with an amount of 1100. And trade receivable will also be credited with an amount of 1100, because it is, again, we have not recorded it yet. I repeat it again. See, we have passed the entry sales return to trade receivable, but instead of passing, we should have passed the entry sales return to purchase trade receivable, but we have passed trade payable to purchase return. Now let's correct the mistake. Purchase return is wrongly credited, it is debited. Trade payable is wrongly debited, it is credited. Next, the thing which is not recorded, that will be recorded in the second step. Sales return is not yet debited. I will debit it on the same side. Trade receivable is not yet credited. I will credit it on the same side. It is not wrong. It is not recorded on the same side where it should have been written. So I will write on the same side. So the rectify entry will be purchase return, or correcting entry sales return debit, purchase return debit, trade payable and trade receivables is going to be credited. So now the examiner we have gone for the errors. Now the examiner has asked us to correct balance of retained earnings at 31st December. The balance of retained earnings is given in the question. Here it is, 242400. I will write over here, retained earnings, balance of retained earnings. Just a minute. Let me see it again. 242400. Okay. Right. Now you have to go, just look at the entries and you can be able to understand what to do. This is the incorrect balance of retained earnings, right? So you can write incorrect retained earnings if you want to. Now, what I'm going to do, I will see that in which entry the account of any account regarding income statement or statement of profit and loss is going to be written. So the first entry, the cost of sales is credited. So when income or expense account is going to be credited, it will increase profit. So on this retained earnings, I will add closing inventory under value. Inventory under value will be added. What is the amount? That is 3,600. It's simple, right? Then provision for depreciation and profit and loss account. So again, the depreciation has been overcharged. So I will add depreciation overcharge because I have written depreciation more than its actual amount, because we have to record depreciation as with an amount of, what should I have said, 48,000. But we have charged depreciation 60,000. So we have basically subtracted 12,000 more from profit. So according to the entry, profit and loss account is credited. So it will increase profit and depreciation overcharged. And that is going to be 12,000. Last entry, purchase return and sales return are debited. So because both of these, we will subtract it from the profit less purchase return and less sales return. And then we can find the corrected retained earnings, 1,100, and again, again 1,100. It will be subtracted, right? So let's do it. I will find the answer of my correct retained earnings, and if you just calculate it, let me calculate it for you. That is going to be, I think I have to calculate it. Let me see. So one thing which is very important, sir, why we are subtracting purchase return and sales return? Any account regarding income statement or profit and loss, if it is debited, it will be subtracted. If it is debited in the rectifying entry or correcting entry, it will be subtracted. And if it is going to be credited, it will be added. Like cost of sales and profit and loss account is going to be added, right? And this purchase return and sales return is going to be credited. So the answer is going to be 224,600. So let me write over here 224,600. So this is the amount of correct retained earnings. That is 224,600. I think I have gone for some wrong calculation. Let me check it out again. What is the amount of 242? Yes. Let me simplify it again. 2400. So purchase return, if debited, it means that your income is decreasing, because purchase return will decrease purchases actually. It is counter effect for purchases. So if it is debited, it means that our income is increasing. But that income is debited. Income is debited, so it means that profit is decreasing, so we'll subtract it. Sales return is already a loss for us because our income is decreasing. So that's why it is also subtracted from our answer. Yes, 255,800. Sorry. Right now, I'm going to prepare the balance sheet because the question has demanded us to prepare the corrected balance sheet. So let's prepare the corrected balance sheet. I'm just preparing it right in front of you, but I'm just subtracting, rubbing it up this part because it's not needed anymore for you. And I'm going to prepare the balance sheet over here so that the retained earning portion will also be with you in front of you, because all those things which affect the retained earnings will also be taken into account in the statement of financial position, but not fully How come? Because in statement of financial position, we will record only those things which are related to the, which are basically related to the, just a minute, to the balance sheet items. So those things which are related to balance sheet items will be factored over here. So I'm going to write the capital letters S, O, F, P. You can go for the calculation easily whenever it is required. So I will go for the solution here. So first of all, I'm going to write the non-current assets, because in the balance sheet, you believe that first of all, we have to write non-current assets. And if you see the non-current assets available in the question, let's go to the question again. And that is going to be, first of all, that is furniture and equipment. But furniture and other than furniture and equipment, I think we have another asset, that is property at valuation, 10,60,000. Well, let's write that first. Property. That is 10,40,000. Let's see if I'm right or wrong. 10,60,000, sorry. Okay. Next is furniture and equipment. Now I am going to prepare 3 columns for that, so that you may not find it difficult. Furniture and equipment, the cost was basically 2,40,000, and the depreciation is going to be 48,000, right? So you can easily go for the correct value, the answer. I'm sorry. Instead of all these things, you can go for the direct calculation also. How come, sir? Let me make you understand. You will write over here 2,40,000 cost minus 48,000. You will get the answer, and you can write it over here, and that will become 192,000. And then you will go for the total of this, and you will prepare the balance sheet. The non-current asset section will be completed. Let me calculate it for you. 10,60,000 plus 192,000, that is 12,52,000. Next comes the current assets, right? Because the next is the current assets. So let's write the section we are going to have regarding the current assets. The current assets, first of all, we will write the closing inventory. So closing inventory, if you just write the closing inventory, you will see if there is any adjustment regarding closing inventory. Yes, closing inventory has been undervalued. So you need to add 3,600 in closing inventory because it's an asset. Asset is debited. It means that closing inventory is increasing because it is undervalued. So you have to add 3,600 in the value of closing inventory. So closing inventory is given 84,000. So I will write 84,000 plus 3,600. And the answer I will write that is 87,600. So that's it. Next is the trade and other receivable. Trade and other receivable. So that is very important actually. Trade and other receivables are the most important part. Why, sir? Because if you just look at the question, trade and other receivables are given in the question, that is 39,200. But if you just look at the entries, so trade receivable has to be decreased by 1,100 because we have not yet credited trade receivable because of the sales return. So because of sales return, you have to subtract 1,100 from trade receivable, that is 39,200. So I will write over here 39,200 minus 1,100. So the answer is going to be, that will be 38,100. Sorry. Right? Then cash and cash equivalent. Cash and cash equivalent is the that is not changed because there is no rectifying entry, no correcting entry is affected cash and cash equivalent. And cash and cash equivalent are given. Debit balance 28,900, which will remain the same. It will not be changed. I will go for the total of these, and that will give me the total of total assets. I will be able to find the total assets over here. So 87,600 that is 154,600. Total will be 154,600. And the total assets are, I'm going to write the total assets. That is going to be 140,660. 140,660. Right? Now the comes equity and liabilities. Next portion of the game, equity and liabilities, in which I will write equity first, and in that I will write issued share capital, or share capital. You may write anything. Issued share capital. Let's see what is given. That is, here it is given issued share capital 7,50,000. Then revaluation reserve, I will write 70,000. Share premium, I will write 2,20,000. So here I'm going to write 7,50,000. Then I'm going to write revaluation reserve. That is 70,000. Then I'm going to write share premium. That is 2,20,000. And then I'm going to write retained earnings. This is the same retained earnings which you have corrected. And you have to write the corrected figure, my dear, because that figure which was earlier we have written, that was incorrect figure. You have to go for the corrected figure of retained earnings, and then you will go for the total of the retained earnings and the total of the equity and liability section. Equity section, sorry, I mean that. And that is going to be, let me calculate it. 7,50,000 plus 2,20,000 plus 70,000 plus 2,55,800. That is 1,295,800. So here I will write over here 1,295,800. So now I'm going to write the non-current liabilities, but there is no non-current liabilities given in the question. So I'm going to write the current liabilities. How come you can say that there are no non-current liabilities? I'm going to show it in front of you. Let's see. So no non-current liabilities are given in the question. No, given is the question. Sorry, there is a non-current liability, 8% debenture, which is 90,000. So let me write it down. Here I'm going to write the non-current. And in front of that, because the space is little short, so in front of that, I'll write 6% debenture. So 6% debenture is going to be the non-current liability. And the amount is going to be 90,000, which I'll write in front over here. Then I'm going to write the current liabilities. In current liabilities, I will write two things. That is going to be, one is trade and other payable. Trade and other payable, obviously, that is the current liability. And the second current liability, if it is given over here, if you just look at the question, if not given, there is nothing. So there is the only trade and other payable. And the calculation of trade and other payable is very important, my dear. Listen to that. Trade and other payables are given 19,700. 19,700 trade and other payables are given, right? So I have to add. Trade payables are credited 19,700 plus 1,100. I'll go with this, right? So trade and other payables, I will write now. Why, sir, 1,100 is added? Because in the rectifying entry, trade payables are credited by 1,100. So the trade payables are increasing, has increased by 1,100, right? So it will become 19,700 plus 1,100. That is going to be 20,800. And then you will add, you will get the total equity and liabilities. This is going to be the equal of the above side, that is 140,660, and the balance sheet is equal. So this is the second question we have done. For this question, I'm going to solve the third one, which is from ratios, as given in my guess in the last year, in 6 months back or 4 months back. And the last question is from marginal costing, CVP analysis. I'll discuss that also with you. Always remember that labeling is very important. Like total assets, I will write over here. Same is the case here, like this. These kind of labeling is very important in solving the question, because without labeling, maybe they will not give you the marks, required marks. They will deduct the marks from you. So labeling is important. So you have to go for the labeling at any cost. Right? So any question regarding this question, we have prepared the balance sheet in total and they are both sides are equal. If you have any question, you can ask me on my WhatsApp number or you can ask me on my YouTube channel, Learn Accounting with Sir Haris. Let's move on with the third question. And please share these videos. Please share these videos because it is of no use if you are not sharing this because it will help the students. My channel is not monetized, right? So it will not help me that much in comparison to what help it will give to the students because they can find their errors, they can understand what they have done, and they can predict their result also. They feel happy that, okay, we have got the mark scheme, we have got the solution, and we can see that what mistakes we have done, right? So do share these questions because it's not available right now on social media. It's not available right now, I know. So this is the only one, the only channel in which you are having these answers of the current series of May-June 2024 variant 2.2, right? If I would have other variants question, or I will be able to solve that also, inshallah, for you. Thank you very much. Take care. See you in the next class. Allah Hafiz.